At this point, you should be able to visualize a box. What does that mean? You look at a chart, you can say that's a consolidation. You got to be careful short above here. You got to be careful long below here. The box is showing you there's a certain amount of people who are long and short in that consolidation. There are people long and short above, below, all over the place, all over the place. When does people who are short get nervous or when people who are long get nervous? Because that is the beginning of maybe the next move we're trying to predict. Is the next move going to be to the upside and break out or to the downside and break out, right? Below there or above here. Now, it's generally going to have to do with people who are in a position getting nervous. If a lot of longs are getting nervous, we're probably going down. If it's more shorts nervous, probably going up. Because if you know anything about watching these videos in this room, is what? Shorts are future buyers, right? And longs are what? Future sellers. You have to know that much. What do you need for the price of anything to go down? Future sellers or future buyers? Future sellers. What do you need for the price of anything to go up? Future buyers. So more shorts, more future buyers. More longs, more future sellers. Now, what are some clues in the real time where most other people fail at getting good, staying good, creating a skill to sharpen your predictive skills? You're looking for sell imbalances of orders, which are triangles here, but also OPP, other people's positions. Now, if you want the market to go down, if you're bearish and you're short, do you want a lot of shorts or you want less shorts? You want less shorts when you're short. You don't want the competition. All right. So you want more longs, if anything. If you're short, you want longs. Why? Because we just said more longs equal more future sellers. Do you want more future sellers if you think and want price to go down? Of course. So what do we get? What do we see in here? We're right in the middle of this congestion box. First thing we get are two buy imbalances that get breached, which means price gets underneath it. That's bearish. We get a pink triangle that actually gets price to go down. That's bearish. But another thing, right here, it's balanced 28 by 28. That's a sample size of how many contracts are long and short over the last 2 minutes. It's balanced. We want to see what? If you're short, what do you want to see? You want to see more longs or more shorts? These are longs and these are shorts. You want to see what? More longs. You want to see this number grow and this number shrink. If you're short, remember, more longs equal more future sellers. Do we see that in real time to give us an idea and timing, better timing to get short? Because predicting where price is going to go in the future is only part of it. You got to have good timing and know when. Where price is going is important. When it's going is always most important. Always most important. Tell me when, and I could trade with my feet. Put the mouse on the ground and trade with my toes. When? Who cares where? If you could tell me when, that's most of the problem. Now, if we look at this, watch this 28 by 28 number. And we kind of fast forward it a little bit. What do we see? We see it grow a little bit, 35 by 28. Remember, this is just a sample size, so you got to look kind of the ratio. We fast forward it, gets back to balance. Another thing that's pretty bearish is look at the chaser over here. Lots of gray, not a lot of white. Whites are buyers, grays are sellers, and they're aggressive sellers and aggressive buyers. Less aggressive buyers, bearish. More aggressive sellers, bearish. 268 to 597. Again, everybody is seeing this, not just you, not just me. Everybody sees the bottom of this. That's not a secret. The longer it's been there, the more people see it. The more people see something, the less of an advantage it is, the less of a clue it is, right? The edge and advantage to anything is not a lot of people know. Again, everybody knows above there and below there could be a breakout. Key is to get more longs that are going to start climbing over each other to get out. They're the future sellers, remember. So when we fast forward this again, and you could see a big jump in longs right there. Where? Right here, 33 to 43. And down it goes. Boom. So is it a coincidence? Hell no. Is it better timing? Of course. When you see it jump, not just leak up there, let me bring it back. It was right there. 32.33, that's balance, right? Then all of a sudden, it jumps and goes 21 to 42 in just a second. I played it in real time. Take a look at the chaser. That's what we call this far right profile here. 619 future sellers, just 212 future buyers. So you get more longs than shorts. You got more aggressive sellers than more aggressive buyers. And you breached this blue triangle. You respected this pink triangle, which is bearish and bearish. So you don't have to get short. But if you get long, we got to order a CAT scan and get your head checked out, because everything is pointing to a breakout. And so you're either short, you're on the sidelines doing nothing, but you are not long, or we're getting the CAT scan ordered up.